Was this budget more politics than economics? And that became painfully clear when the OBR accidentally released the budget documents early, throwing the entire process into chaos. The result, a shambolic rollout of major changes that will affect almost every working adult business, owner, landlord and saver in the UK. The noise in the media is focused on headline grabbers, but under the radar are subtle shifts in tax that could quietly cost you thousands over the next few years. So let's break down the 10 budget changes you absolutely must understand and how to plan accordingly. The income tax thresholds have been frozen until 2031. What does this mean? As your income rises, more of it gets taxed. It's stealth taxation at its finest, dragging more of the population into higher rate tax. From April 2026, dividend tax rises by 2% for basic and higher rate taxpayers. So let's take an example. For a limited company director taking a small salary and the rest is dividends up to their basic rate band, they should expect an increase of around about £800. I believe it's still cheaper to take the salary dividend route, but what I would suggest is that you contact your account manager to have that discussion going forward prior to April. It might make sense to take extra dividend this year prior to any jump in tax. From April 2027, property and savings income will be taxed at an additional 2%. So basic rate on rental income and savings income will be 22%. Higher rate will be 42%. So landlords and savers are in the crosshairs again. From April 2026, the national minimum wage rises to £12.71 for those 21 plus, and increases for younger age groups too. So great for workers, but business owners, especially in the hospitality, feel the pressure. From 2029, salary sacrifice pension contributions above £2,000 will be hit with national insurance contributions for both employer and employee. In plain English, the most tax efficient way to save for retirement is getting watered down. From 2027, EV drivers will pay 3p per mile in road duty. Is this the beginning of the end for EV tax perks? Entrepreneurs who sell to an employee ownership trust on or after the 26th of November this year will now just get 50%, not 100%. And worse still, there's no business asset disposal relief on the remaining 50%. So that slashes the incentive for existing founders to now sell to EOTs. Will we see less of those in the future? 2027, under 65s get a reduced cash ISA from the previous £20,000 limit. And together with the increase in savings tax, it gets harder to protect your money from being taxed. If you own UK residential property worth more than £2 million, the new annual mansion tax adds an extra layer of cost on top of your existing property taxes. This is particularly painful for landlords and families in London and the South East, where ordinary family homes can easily tip over the £2 million mark. High value property is no longer the clean, low tax store of wealth it once was, and you need to factor this annual charge into your long-term planning. Prefer to review in your own time. We've created a simple guide that explains each budget change and how to prepare. Drop a comment saying guide below and we'll send it straight to your inbox.